Great. So up next, we're moving slightly southeast. I'm going to invite Eric to bring his panel up onto stage to look at, give us a sense as to what dynamics are happening within the Central and Eastern European region. Shall we go?
Welcome, everyone. Thank you so much for making it, because we're well aware that 5 p.m. at the end of a long day like this, and with so many cocktails on offer outside, it takes an effort to be with us, so we really appreciate it. Thank you. We don't have that long. We have about 30 minutes, so let's get cracking. Very brief introduction. I'm Eric Maybeau. I'm a founder of a boutique placement agency focusing on emerging markets, and I started focusing on Eastern Europe, hence the name of the company, EOS, meaning East in Greek. Guys, would you mind introducing yourselves as well?
I'll go next. I'm Anne Fosmal. I'm with the EBRD, which is the development bank that was founded to work in Central and Eastern Europe. Also expanded the mandate to Turkey and North Africa, and we're a big investor in that region, and we have a portfolio now overall in all of our countries, about 3.2 billion euros or something, of all the countries we cover.
Good afternoon. Paweł Gryński, I'm managing partner of Abris Capital. We are based in Warsaw, private equity player in Central and Eastern Europe, and we are specializing in ESG transformation, 1.3 billion euro of assets under management.
Good afternoon to you too. Michał Gładyś. I work for PFR Ventures. We are part of the PFR Group, which is a development fund, a government agency out of Poland. We are very much like KfW Germany, or even more so like BPI France. We invest private equity, venture capital.
All right. Let's start maybe with clarifying something. What we agreed among panelists is that what is it exactly that we understand by CEE, because you can have different definitions. So we agreed that for the purpose of this panel, we're limiting it to what we will call the EU 11 countries. Okay, just to give some focus. First question, when you see how much money is being poured, how much money one could make in developed markets, why invest in CE, in your opinion?
So we invest in CE because it's our mandate, but what we feel that adding Central and Eastern Europe to your portfolio as an LP is the countries that are part of the EU with the rule of law, etc. You have GPs who are dedicated to invest in this region, who have deep and broad experience with proper portfolios, actual exited companies. We have shown that it's possible to actually make money investing in this region, which is of course the first thing that we want to do. They're experienced GPs who are capable of adding value to the portfolio companies and increasing broad range of different strategies also you can invest in, from mid-market to VC to ESG, for example, adding value like Pavel and some others. That would be the beginning. There are many other reasons to invest in CE, but that would be my start.
Okay, so I will try to add to this. CE is, and for any foreseeable future, will remain to be the fastest growing part of the EU. Okay, so why to invest there? Because this part of the EU is growing faster than any other part of the EU. When you look at these 11 countries that Eric just mentioned, those countries together have population of 100 million, quite sizable population. Okay, with demographics better, more interesting than demographics of Western Europe. It's quite important from investment perspective. I hope we all agree here. It's also economy that is changing quite quickly. Big part of it is convergence with the EU, okay? So it's sort of catching up with the EU, but let's face it, there's inflow of European funding to support that. Just to give you an example from Poland. When Poland was joining the EU, we had 40 kilometers of motorways, 40. That's it, okay? We have now 1,200 and building, okay? So, and counting. Okay, big change when you think about it. And the same applies to almost every other piece of infrastructure you can imagine. The other argument or other thing to take into account is that those economies are digitizing very, very quickly. And some people that are coming to Central and Eastern Europe are surprised how technologically advanced some of the countries are. Some of it was that some time ago, unfortunately, we were lagging. Okay? So when you are adopting new technology, you're adopting the newest available technology. You don't have to be concerned about amortizing, depreciating the previous technology because it was not existing there. Okay? But a number of those elements, considerations, make it an interesting ground. Michał, I'm pretty sure you would like to add something.
Well, I did just want to chime in and expand on what Pavel was saying in that, over the last, 5 years, the growth as a component or sub-asset class within the private equity grew. And when you look at Central Eastern Europe, this is actually the growth story, right? And it will continue to be a growth story. So if you want that type of exposure, but at the same time you have a rule of law, you have countries that are being part of the Western civilization, they just need to catch up, and they are catching up, then it is a good story, right? All things considered, and we'll probably come back to this current situation, again, if you're looking for growth, Poland, Romania, Czech, Hungary will be a growth story for your portfolio.
And maybe I could add a very highly educated and motivated workforce is a very also quite important aspect.
Which is one of the factors behind the tech successes.
Yeah. So that's what we've seen is tech, I think a lot of people would associate, for example, the Baltics with tech, and definitely there's tech there. But we've seen growing tech also in Poland and all the countries in Central Europe. I think there was a ranking of the number of the ranking of the countries per number of software programmers or IT specialists, and in the top 10 you had more than half that were Central and Eastern European countries, because it's something that's really part of the DNA. And we've seen it also, there's definitely been some EU money poured in this, but we've seen great successes. For example, UiPath, which is probably one of the biggest successes in anybody's VC portfolio nowadays, is initially a Romanian company held by a fund manager that covers Central Europe and Turkey. So it's really from there. There's many other VC successes in the region.
There are two sort of other things that I wanted to mention. One, actually saw a statistic somewhere about Poland as a country that is now one of the fastest growing number of millionaires. Generally speaking, this region is known for creating more and more wealth and accumulating the wealth. So that gives you a good perspective of, possibly setting up your shops these days to capture that, in a few years. And then the second portion is, this part of the world is very open to innovation. It remained under the under Iron Curtain, right? And had no idea, no chances of actually testing new ideas. So flip to now, it's very open to innovation. It's very easy to test new technologies because people want those technologies. I always use the sort of consumer example of food, where if you go to Poland and you want to try food from any part of the world, you can find a restaurant that will serve you high quality type of food, and it's just tells you how people look for different things, and they're not afraid of testing. It's different from Western Europe. It's different from, French cuisine is well known for being very good, but then, if you want Asian food, it's going to be a little bit tougher to find a good restaurant.
But let's look for the moment what this adoption of new technology really means for the economy. It means sudden and very quick improvement of productivity. And this is very important, because productivity of labor force in Central and Eastern Europe is still lower than in Western Europe, but it's catching up very, very quickly. But if you adjust those measures for wage, it's actually higher than in Western Europe, okay? Partially because, again, when newer factories build, because of reshoring or whatever the reason for locating manufacturing base there, it's built to the newest available standard. Okay, so it's more automated and so on. Nobody invests there. Very few people. I'm not aware of significant investment there made because of cheap labor. Okay, it's a theme of the past. It was early 90s, maybe early 2000s. Okay, but people invest there because they can produce in a very sort of effective way. And why it is important? It is important because increasing productivity is the only way for Central and Eastern Europe not to fall into what is called middle income trap. Okay? Because a lot of people are sort of thinking, okay, those countries are catching up. Okay, those countries are converging, but there is middle income trap, and this growth will end up. Actually, if you can continue with improving productivity, this growth will continue. Okay, so the convergence will last, and that's, I believe, very important measure to be followed and to be observed if somebody wants to take an educated decision about investing in Central and Eastern Europe.
I think maybe another aspect to bring as a top up to this is that with what's going on in the world at the moment, there's going to be an increasing trend probably for nearshoring and for growing companies from Western Europe to Eastern Europe and vice versa, and trying to source whatever you need for your company, your enterprise in another country from countries which are very close and that are very easily accessible and understandable, which are the whole of Central and Eastern Europe. So it's a fantastic opportunity for Central Europe, this new sort of more nearshoring trend.
Is that something you starting to see, these nearshoring already? Some examples since COVID maybe it might have been a wake-up call.
If I may, I mean, we are a private equity investor. We invest in a lot of businesses, so we see it from perspective of investments we make. We have, for example, invested in a business that does the full warehouse management systems and so on. So what we see is a very increased interest from foreign investors in building massive warehousing base in Poland. Again, fully automated, the top technologies that are available. And interest in that is, if anything, accelerating. Okay, and we see it for the last 2-3 years. And again, the biggest change is not just the space, but specs. The technology that is to be employed in those warehouses. That's really something that is changing. But we see a lot of investors deciding to move their manufacturing base into Eastern. Some of this is nearshoring, some of it is supplementing the existing supply chains, basically to make it more secure, but some of it is really to replace the historic existing supply chains, because in a new global environment, they are not proving to be effective. Okay, and I strongly believe this process will only accelerate. We are about to see the world that is more fragmented, more regionalized. Okay, so Europe would like to have more production in Europe. Where in Europe? That's the question that a number of investors will need to answer for themselves.
To your point, Michal, about earlier on about the fact that in Eastern Europe, you would say generally people are more open to new ideas, new things. Just something, tell me if something we haven't prepared, but 2 weeks ago I was in Zagreb with a new client, and I couldn't believe it. At some point I was on a local grocery store, okay, not a mom and pop, but still not a big thing, and there was a sign saying, hey, you can use crypto. So I didn't have any crypto, couldn't test it, but is that something you see also in Poland or some other countries, or that was just a fluke?
Generally speaking, and again, I am from Poland, so it's the region that's, country that's most familiar for me, but I try to travel abroad. You see a lot of fintech innovation in this region because it was so behind, right? It's people never use checks, you hardly use credit cards, right? All of it is now in their phones and watches. The largest Polish bank actually developed the non-touch system, which is actually pretty innovative. And so Yes, I would say quite a few places accept bitcoins, and there's places that in the shopping mall you can go in and buy any cryptocurrency you want, right? And it's actually there. It is surprising, and especially sort of type of places that you see those things, but it seems to be very democratized, right? In that regular people are actually buying into it, right? Whether it's good or not,
No, it's still interesting. It's different. Okay, now maybe let's address what might be the elephant in the room when it comes to the region. What do you think is the impact of the war in Ukraine on the region?
Okay, maybe I start. I mean, from my perspective of person living there, investing there, and so on, the war in Ukraine, if you want to call it this way, although maybe there are some more appropriate terms for this, has really started in April 2014. Okay, that's the fact. We've seen this conflict having high or demonstrating how high intensity, lower intensity, but it's a continuation of that conflict that started in 2014. Okay, so what we face today is 8 years of that war, and it's very important to establish this perspective for interpretation of what is happening. So for people in Eastern Europe, Central and Eastern Europe, it's not something that is new, that is surprising. It's unfortunate, okay, it's tragic, okay, but we unfortunately had to adopt that the war is next door, and we adopted it 8 years ago. And we took a number of actions to basically adjust what we do and how we do for that perspective. For example, diversification in buying energy means, a diversification, to be clear, away from Russian gas into other sources and so on. Okay, that is very important. That is very important now. Almost entire reduction in sales to Russia, okay? And for some companies, a very difficult and a very costly reorientation for selling into West. But those are the results of the war that started 8 years ago. I realize that for some people it may be a new development, okay? Because something happened back then and people forgot about it and suddenly they are surprised that it's something new. But it's not new. It's all the time the same war that is not finished, okay?
I actually think that it's a tragedy and people die, but there's a lot of very encouraging things. From the perspective of countries, neighboring countries, the way people treat their refugees, the way they're being accepted, it speaks tremendous volume of the character of people that actually live in those countries, Poles too. That also means quite a few things that are, if you sort of separate the feelings from what's happening, are again showing the bright future. Poland had an issue with its aging population. Well, it's actually being filled now with people not just from Ukraine but Belarus and Russia that immigrate to Poland, highly educated. People writing code, people that are IT oriented, and they move to Poland and they'll probably stay in Poland. They don't want to go all the way to Western Europe because Poland is still close to their home. Culturally, we were very similar too. Kids are now going to Polish public schools. Those kids learn Polish quickly. They pick up because it's a similar language. Alphabet is different, but they learn quickly. Think of it, how much goodwill is going to be created through just that experience, right? When they come back, and we hope they will come back to their homes, they will look hopefully at this experience as they do have friends in the Western, in Poland, in Romania, other countries. Then there's, hopefully the rebuild efforts. I hope it's going to start happening next year. Being realistic, we're looking at a prolonged type of, military operations, but let's say it's going to start happening in 2 years. guess what? Most of the rebuild efforts will go through the neighboring countries. Poland being one of the largest one and quite developed already, having strong engineering, heavy equipment already in place for what Pavel was telling about building the highways. All of that will result in money flowing through the country, and Poland being a beneficiary as an ancillary to what's happening there. Lastly, it's very encouraging to me, looking at sort of just the military side of things, that we as people from the West seem to have technology figured out, and it's actually, I hope the last war where the kinetic part of it is and people actually being killed, maybe the last time we had this sort of traditional type of war. If there's going to be a conflict, I hope they're going to be more electronic and sort of on the side of data fights, but not so much people dying. That's just my view.
I have to say, it's been spectacular to see. I don't think of all of our GPs, I think every single one of them have a few people who've taken in refugees and helping them find jobs, etc. It's been quite spectacular. And I think the Ukraine has a very developed IT talent, and it's a talent that's still in Ukraine, and then moving internationally, and definitely in Poland, including in Poland.
So, if you don't mind, just coming back to your question and just maybe really sort of being a little bit more specific, what we are seeing today, Michał already was talking about the inflow of refugees, and we are talking predominantly Ukraine, but a lot of people coming from Belarus as well, okay? These people are bringing a very important demographic change to Central and Eastern Europe. We were suffering shortage of labor, okay? There is no shortage of labor now. I'm very sorry, it may sound cynical, and I don't want to sound cynical, but I just want people in the audience to see the realities of the changing environment, okay? The other change is obviously changing consumption. It's a very simple calculation: more people, more consumption, and that is also important for local economies, and it's happening right here and right now.
But to that point, I mean, how the countries coping with that influx of population? Because I hear you, but it's not that easy to say all of a sudden we got. I mean, how many are we talking about in Poland alone? Do we know the number of refugees?
I doubt we know exactly, but we are probably talking north of 1.5 million people just coming from Ukraine, and significant number from Belarus. I mean, much smaller, but still significant. At certain stage, it was much bigger number, but some people moved west, mostly to Germany. I just can give you an example of myself or some of my friends. When we initially sort of provided accommodation for some of the refugees, they were having really nothing. But a few months later, they got a job. They rented their own apartment. They moved out, and that's okay. There are some people still that are potentially looking for job. Okay, and let's face it, if there is a single mother with 3 kids, it's not easy for her. Okay, but people are slowly, each of them on their own way, finding a way to basically settle in, accommodate, find means of income. Certainly difficult. I'm not saying it's easy. It's never easy for anybody. Okay, but it's slowly and gradually happening there.
And I realize we already 5 minutes away from the end, but don't want to dwell too much on that point. But Pavel, did I hear correctly that you were saying that somehow maybe Central Eastern European economies are better prepared to the energy crisis that is hitting us at the moment?
I mean, it's very difficult to generalize, okay, in this case. But when you see how much energy, for example, Romania is buying, how much gas Romania is buying from Russia, less than 20%, okay? It's a very positive exception in Europe. Poland is buying more, but Poland is buying much less than it used to buy, okay? And it's also a very significant change. When you see almost any country, with some exception of Central or aggregate of Central and Eastern Europe, Central and Eastern Europe in aggregate is buying less from Russia of energy, means that Western European countries in aggregate. So from that perspective, they are better prepared. Unfortunately, Central and Eastern European economies are carbonized, okay? So that is a limiting factor in sort of diversifying production of energy. But that also means going forward, there will be significant investments to decarbonizing, okay, and establishing alternative sources of energy. Why? Because this is the EU-wide plan that we have all, our representatives actually, but we have all adopted. And I have a strong, not only hope, but belief this will be taking place. And this will change the way Central European economies function and continue to develop.
I do apologize. I realize we only have 3 minutes left. It's my fault. I wanted to leave a bit more time for questions. Does anyone have any question? Do we have a microphone?
I will try to talk loud.
Thank you.
Yeah, very quickly, I fully agree with a lot of development, but what is very surprising, we're launching 2 renewable energy funds, one in Africa, one in Central Europe. And what is surprising, people are not really excited to invest in Central Europe, but more for Africa, which is a bit challenging, same terms. How do you explain this?
I don't think we are well placed to comment on it without knowing who your investors are and what their motivation is. It shouldn't be the case. That I would say.
But I think generally the fundraising for GPs in Central Europe has followed. In 2000, it's in the ease of fundraise for GPs to fundraise is inversely proportional to the amount of money development organization, myself and my colleague here have to put in the funds in Central Europe, right? And in 2006 and 2007, there was an influx of private capital in these countries. And we were going back, and then after the financial crisis, it went back up, and now it's going to go, further up, which is a real shame because there's some excellent GPs there.
I actually think that part of it is, I used to work for a large institutional investor out of US, and part of it is when you have an allocation to a region, to Europe, you're not really thinking that, okay, I'll have a special allocation to Central Eastern Europe, right? You look at it as this is my Europe. And so if your bucket is already filled for the Western part, then you're not taking it. Now, you don't really have Africa because there was nothing to do very little to do in Africa. That's why you want to bring it up to a certain level. That's your demand for the product, not so much for Eastern Europe. So it's a little bit of a trap, right? But that's how it works.
As an LP, you can get a bit of Central Europe by investing one of the global funds that might do one deal, but you're not going to be in the same. It's not going to be the same segment of the market, which I personally think is more attractive, which is that addressed by the mid-market GPs. They have access to different type of deals than the big ones who are just doing one deal.
Very quickly, if you don't mind.
Scott Richards from Cross Boundary. Thank you for the presentation. I was curious, to what extent do regional capital markets, equity capital markets, play a role in your expectations around future liquidity points, whether that's Bucharest or Warsaw? And do you see that changing going into the future?
It's an excellent question. I mean, just looking at currently at the Warsaw Stock Exchange, that being the worst stock exchange in the world, it tells you a lot. And the reason for the performance is twofold. It's sort of quality of the companies that are being listed, but also the government control over the companies that are being listed and an impact of government policies on the pricing of the stocks. So long term, it doesn't look very good. But you have an example of Allegro that listed, and it was a very successful listing. Now, liquidity-wise, it may be difficult, but it was still a very successful IPO, right? And so you will find opportunities to list and actually sell the company because there's a lack of quality of companies. Now, when it comes to the whole economy, that's not really a good solution. So I actually think that we'll follow the example of countries like Finland or Israelis, where there's going to be straight to the very developed markets if you think about the IPO. But in between, hopefully the private markets will pick up where the publics are not able to.
But if I can just say one thing to this, in our portfolio, there's about probably 650 exited companies in that region, and from that, the vast majority is trade sales. but the better returns were on the listings, and there has been some spectacular listings, including Allegro, of course.
Anne, Pavel, Michel, thank you very much.
Thank you.
Thank you all.